for watching another Trader Guy video. This is a trade idea video for the week of June 24th coming up. And as you can see, I have the British pound US dollar pair in front of you. The moving average on the chart is the 200-day moving average. There's a lot of different moving averages here actually that I could put. I'm going to change color here just to kind of give you an idea of where everything's laying out here. These are exponential moving averages. It really doesn't make that big of a difference. Some people get concerned about it. At the end of the day, it's all the same. Anyways, there we go. So you can see we've got 200, 150, all of which are in this general vicinity. You're starting to see a situation where the 100 or the 50 did try to cross, but it's not quite able to cross over the 100. That being said, the only reason I bring these up is just simply because other people look at them. Personally, I really don't put much stock into them, except for maybe the 200-day moving average, just simply because so many of the world's stock traders who have become Forex traders will use these to determine trends. And quite frankly, it makes more sense in the stock market that has 200 days in a year than it does in Forex. But nonetheless, it does get mentioned. So having said that, that's why it's on the chart. What you can see is, and I'll go ahead and put another line here actually, what you can see on this chart is that the markets are definitely divvied up quite evenly in 250 pip increments. We've had a significant breakdown. We could even draw a fib from the fall back there in late 2012, and you can see we almost reached the 61.8 retracement. But nonetheless, what's caught my attention recently is the fact that we formed this hammer here at 155, which quite frankly I thought uh, could have been a very good buy signal, but you can see it didn't work out that way. And in fact, we managed on Friday to break down through the bottom of that hammer, which is a very negative sign. It shows support giving way. And then here we are, and full disclosure, I'm recording this late Sunday night in North America, so the Asians have started trading their Monday session, and we gapped down. Nothing massive really to talk about, but it does show that there is still downward momentum in this pair. I don't know how far it'll go, but I think short-term traders will definitely be aiming for the 152.50 area. And that's what I'm doing actually. Whether or not we can get below there, I don't know. If we get below there, though, we could go to 150. Quite frankly, I think the dollar has quite a ways to go. You look around the Forex world, and it appears that the dollar is in fact going to pick up steam again. And the British economy isn't doing so hot. It's doing better than Europe. The problem is they're so heavily tied to Europe. So I would have to believe that there will be a little bit of a drag on the UK anyways. So having said that, with the possibility of cutting back on the quantitative easing later this year, you have to think that the dollar's going to be this one of the dominant currencies out there, and it makes sense to pair it against currencies where there's possible continuation or even expansion of quantitative easing, which the UK does fall into that category. So, having said that, very interesting. I think we'll probably go down to about 152.50 sometime this week. And at that point in time, I may take profits. We'll just have to see what the action is like here at this level.